Francis. Francis is a public health worker who has recently been employed and wants to open a bank account to receive his monthly salary and manage his finances. He recently heard about the fantastic rates offered on savings accounts by ACME Bank and would like to open an account with the bank. Excited, he downloads the ACME banking application to commence the account opening process. He selects the option to open an account and he is asked for his desired transaction range. He selects the 5,000 to 30,000 naira option and he is excited as he is informed that only his BVN, signature, and passport photograph are required for the account opening process. He puts in his BVN and he's prompted to provide his passport photograph by taking a selfie on his smartphone. He's asked to blink to confirm there is a live person behind the camera. His selfie is automatically captured and the image is verified with the image on his BVN records. The images have a 95% match, which is the threshold set by the bank. He then proceeds to upload his signature. His account is successfully created and he is prompted to create an online banking profile. His e-profile is created successfully and he can now enjoy all the benefits offered by ACME Bank without having to visit any of the bank's physical branches. After 2 years, Francis has received a significant salary rise. He is very happy with the ACME banking app and desires to make the ACME bank account his primary account. He needs to upgrade his profile to transact with much higher limits. He also wants to request for a loan to take a part-time medical course during his upcoming vacation. Francis logs into the app to migrate to a higher account tier. He clicks the profile option and selects upgrade account. The app displays the upgrade options and Francis selects the highest account tier. He opts for the option to retrieve his KYC documents from one of his other banks. The app then downloads his verified ID and utility bill from his selected bank. The address verification is successful and Francis receives a notification indicating that his account has been successfully upgraded. Once the upgrade is completed, Francis receives a message indicating he is eligible for a personal loan. He clicks the notification to commence a loan application process. This app informs Francis of the maximum loan amount he is eligible for. However, he wants a higher loan amount. Hence, Francis selects the I need more option. He is asked to grant permission to ACME Bank to access his transaction history from his other banks in order to determine his eligibility for a higher loan amount. Francis grants the permission and ACME Bank pulls his transaction history from other banks and determines that Francis is eligible for a higher loan amount. Francis is excited as the updated offer is more than the loan amount he desires. Francis confirms his request and he is informed that the bank is permitted to debit his other accounts in the event of a loan default. Francis assents to the terms. He finalizes the loan request by authorizing with his fingerprint. His loan request is automatically approved and the loan amount is disbursed instantly into his account. Francis is delighted with the experience on the ACME mobile banking application. He becomes an advocate of ACME Bank and tells his friends to open an account with the bank. Serving as panelists on the first panel session, themed Leveraging Superior User Experience on Digital Channels to Drive Growth, we have Ladi Asuni, Partner, Digital Transformation, KPMG, Nigeria. Ladi has deep industry experience delivering technology-enabled business transformation programs as well as the design and implementation of digital channels for financial service organizations. Tunji Odumoboni, an Associate Director in KPMG's Digital Transformation Practice and lead API and digital platforms KPMG in Africa. He is responsible for delivering API strategies and digital platform implementations across financial services and telecommunications industries. He has vast experience in solution designs and implementations across Africa. Also serving as panelists are Lanre Akomolafe and Inyola Abosede Brown, who are digital channel team leads in KPMG's digital transformation practice. They have led teams of consultants in the reviews of digital channels in financial services across Nigeria, South Africa, Kenya, Ghana, and Francophone countries. To moderate this panel session is our previous speaker, Boye Ademola. Ladies and gentlemen, please welcome the panelists and moderator.
All right, thank you, panelists, for joining us. And let's go straight into it. Ladi, I want us to essentially start by you giving us some context around, why the choice of the 5 thematic areas that we chose to focus on for this assessment.
Okay. So we decided to look at this 5 thematic journeys just as presented earlier: digital onboarding, digital lending, payments and transfers, self-service, and customer care. Not because these are exhaustive journeys, but because this represents a significant majority of what customers perform or would typically want to perform on their banking channels. Again, one of the contexts that is important for our audience is that this was initiated during the pandemic lockdown period, where branches were not accessible in most of Nigeria. And we asked critical questions around what sort of activities do customers need to perform during such a period. Another thing that has also fed into our choice of journeys is our BICS review, which has also highlighted the typical activities that customers perform, on a daily or weekly basis. And these are the journeys that came tops across the different journeys that customers would likely want to perform in a typical banking scenario.
All right, thank you, Ladi. Tunji, let's just jump into one of the journeys, digital onboarding. Can you tell us, Tunji, 85% of banks are unable to onboard customers digitally end-to-end, all right? What is the challenge here? And what can banks that are, listening to us this morning, what can they do about this challenge?
We know the onboarding process in banks is typically an highly regulated area, and therefore, there are a number of safeguards that the CBN has sort of put in place, regulations to protect the integrity of the process, some risk that is inherent in that process. For instance, there's the identity theft. You need to be clear on who you are dealing with as a bank, and therefore that process in itself is very well regulated. And from the assessment we did, it appears to us that banks have taken what I'll call a compliance-centric approach to designing the KYC process. And what that means also is that if you look at the inherent risk like identity theft, we see some banks, it appears to us that banks have also taken the approach to avoid avoid the inherent risk around KYC, around identity theft. So rather than deploying the power of technology to mitigate some of this risk, we see instances where a number of banks are do not support the KYC document upload functionality, a critical part of that journey. And we've also seen banks. You mentioned Standard Chartered as a leader in this space. We've seen Standard Chartered Bank and a couple of other banks in the Challenger Park deploy technologies that can essentially mitigate that risk of identity theft. So where customers are required to take their photographs, there's also something that sort of validates that you have an actual human taking that picture. So you have the you have the liveliness check sort of control behind that. So it means that if I need to onboard from wherever, just like I can be in the branch and you can validate that the person standing in front of you is a human and not a still image, there are technology capabilities that can enable you to do that. So banks typically have avoided this risk rather than sort of mitigate the risk with transformative tech like AI. And I think, you know, the whole concept of user-centric design is one powerful one that we think will really help banks as they navigate the challenges, the risk, try to comply. And I also spoke earlier about the process in itself being compliance-centric. So you have banks that sort of inundate customers, you know, from the get-go with all the KYC Tier 3 requirements. And you have instances where customers, you know, I mean, the customer really doesn't care about regulation, so to speak, in terms of what documentation I need to provide. What they care is they need service, they know what they need. And if the banks are paying attention to the opportunities, which for me is really big in terms of opportunities to personalize, pay attention to that, you can really then know what does this customer want. For instance, a student who has come on the channels to just sort of create an account that he can use to collect stipend from his parent probably needs a Tier 1 account. And as he progresses in his career, maybe becomes it becomes an employee of some sort somewhere later in his career, he may need a more sophisticated account. And at that point, you can offer him the capability to upgrade. So those are some of the things we think can really help, making the process personalized so that you are really offering the customer what he really wants, limiting the number of inputs the customer needs to make to what he really needs at that point.
All right, thanks, Tunji. The digital onboarding, I think, is just listening to you is still a big opportunity. We know from BVN that just about 44 million people are banked, probably less than 50% of the adults or the bankable population in Nigeria. So being, you know, like you say, from a design thinking perspective, reimagining the digital onboarding can be one of those things that help to really bring more people into the banking sector.
Yes, and if I may add to that as well, one of the things we're also saying within the bank is that the entire KYC process is sort of sits within each of the banks. Where we think the industry needs to move to is to a point where, you know, the KYC documents are centralized. And I give you a typical example. I have my KYC that be verified with Bank A, for instance. And then I'm trying to open an account with Bank B, and then I have to go through the entire process again. Bank B is required to come to my house to verify my address and things like that. Where the industry really needs to go to is at a point where this is centralized, either with the government or via, you know, these are open banking, open API concepts, where each of the banks are able to expose API. And you can charge a token for it, where other banks can then just verify against your already verified KYC. And then use that as a means for verifying the customer and granting access to the customer, granting an account to the customer.
All right, Larry, I think that's a really important point, and is in a sense tied to what we're seeing around open banking in Europe, in the UK in particular, being able to make this, in a sense, part of our national infrastructure, the whole identity verification. All right, very quickly, I would like Inyi to talk to us about self-service. How strategic is the self-service opportunity? And what did we see looking at the banks? And again, you know, what did we see looking at the leaders? And, you know, what are the things going into the future from a self-service perspective that banks ought to pay attention to?
Okay, so from our assessment, what we noted is that the delivery of self-service features in the Nigerian financial services industry is currently not at the scale that it's supposed to be at the moment. In fact, only about 20% of banks reviewed, you know, are beginning to fully grasp exactly what self-service entails. And to be clear at this point, at the core of self-service delivery is the digitization of services that are normally provided in branch or via the customer support center, which enables customers to execute their transactions or pull requests to the banks themselves via the digital channels without interfacing with any bank staff or, you know, with the customer care center. And given what is currently ongoing, the global pandemic, which has resulted in restriction of movement, based on policies by the government and all that. The case for self-service has never ever been stronger than this. So it's really strategic for banks to be able to key in to this and be able to deliver adequate self-service, seamless self-service to their customers. So to be specific, what we found from our assessment is that most banks have tried, about 80% of banks are currently trying to implement self-service features. However, they have not been able to fully digitize the entire process. So you find fragmented journeys that require a customer to start the self-service process on a channel, but then you need to complete it by visiting a branch or interfacing with the staff or the customer care center. So the digital journey, the digital experience always breaks at that point where they are supposed to go to the branch. For instance, some banks have tried to implement debit card requests on their digital channels. However, the delivery of those cards require the receipts or collection of those cards require customers to come into the branch. And at this point, customers are averse to that, given what is currently happening globally. So banks need to look at this, need to be able to review their channels, review the services that they currently offer in branch and via the customer care center, and be able to, come up innovatively with how to digitize these processes and then offer them on their digital channels. Another thing we saw is that customers are not giving visibility into the progress of their self-service requests. So a customer requests for a debit card, but he doesn't know exactly, at what point is the card being printed, is his name being embossed on the card, is it being delivered to the branch, even at this point, even if they've not, started with delivering to, the customers' homes. So customers and banks need to actually, involve customers in the process of responding to those self-service requests. A case in point, though, in another industry is Jumia Food. So you order food on Jumia Food, they tell you, oh, the food is leaving the restaurant right now, it's being given to the dispatch rider. You are carried along all the way. If there's traffic, there's going to be a delay. We also experienced that with Uber. The driver is going to be, is going to be late, 5 minutes late. So these are things that banks need to look at to involve the customers, to manage their expectations. Because the customers we have now, they are mobile first. They are comparing banks to other industries, to the telecoms industry, to the FMCGs and all of that. And they get better experience there. So banks need to actually look at this to, lead in this space. Another issue that we noted, or another observation we had, is the limited breadth of services on digital channels with respect to self-service. So we found that many banks offer maybe just basic card requests, but there are other, essential services that customers are expecting. Services like comprehensive card control. So we found the leader in this space to offer card control services such as, enabling a customer to block his card, on POS alone while it works on ATM and other channels, enable or block a card for international transactions. So there are other flexibilities. They need to give customers options. Banks need to look to give customers options and make these services flexible enough for customers to, adopt them. Right now, we think from our assessment, what we think is that banks need to, in order to lead in the self-service space, banks need to actually do a comprehensive review of all the services that are provided in branch, as I mentioned, and then be able to digitize these processes end to end, from start to finish, with the customer in mind, with the customer at the center, putting the customer in the journey to ensure that the needs of customers are met and their expectations are also met, and then start implementing from there. They also need to realize that this is a journey. It can't be completed in one day. So that's the feedback.
All right. Yeah, I like the point you made on the fact that this is a journey. And Tunji, I want you to just sort of expound on this self-service. How can banks leverage self-service to, in a sense, begin to go on the platform journey, to, in a sense, collaborate more with fintechs? We saw, for instance, Fuliza, which was Kenya Commercial Bank, and NCB in Kenya collaborating with Safaricom to deliver a winning product. Again, is this not part of the self-service agenda, or would you say that a platform and collaboration with the ecosystem is essentially a different discussion?
Absolutely, Boye. I think they are very much related. And I'm just to extend what he was saying there. Agrees. The self-service journey is really a strategic one, and I think an imperative the bank have to look at. What we found is that there's an issue with the breadth, but I think the depth of the service is also something that the bank needs to look at. And you're talking about partnerships there. You know, they are not just the fintechs, even logistics firms can actually be partnered with. Take, for instance, you as a bank sort of enable the customer to request for debit cards. To make that experience really delightful, you know, you could actually give the customer the option to have that card delivered to a preferred location, whether that's his office or his home or anywhere he chooses. And you don't have to be a logistic business to do that. You have logistic businesses you can partner with, and hence the whole concept of partnership comes to life. And I mean, like you also mentioned, there are other players in the fintech space that have developed niche solutions to attack certain things the bank, for whatever reason, have not done so well. And I think that's an opportunity there for the banks to really look at how to deepen the experience. The breadth is really important. And as the bank also look at the breadth, there are certain transactions or services that the customers tend to request for more frequently. I think there's an opportunity there to look at those, look at the business value to be generated from there, and prioritize those type of services.
All right, thanks, Tunji. Ladi, digital lending. Again, this is one of the areas that, looking at the 17 banks, we're just beginning to see people, you know, scratching it. Salary advance, you know, lending to people that have salary accounts. Given what we're seeing with the regulator, GSI, the coming of, you know, of emerging technology, proliferation of data, would you say we've come to an inflection point on digital lending? Is this the right time to attack this opportunity? What's your thinking on this?
Okay. Well, from our review, like you rightly said, in the digital lending space, find any leaders, and this is not saying that banks are not offering digital lending in one form or the other, but what we really saying is it's still being played in a very conservative way, almost like it's a risk-driven approach. A number of banks that we reviewed are offering either only salary or payday loans, which sort of gives some comfort because the salaries are, you know, domiciled with the banks. On the other hand, you also have some other banks that are offering personal loans, but at, you know, a very micro level where the loan is typically not catering to the needs of the customers. In one particular review that we performed, where the user was looking to get a higher value loan, but was presented with an offer of just about 5,000 or under 10,000 naira, which doesn't reflect the, you know, the practical reality of the customer. Now, with that said, in the last couple of years, we've seen a proliferation of fintechs, you know, and alternative lenders that are really going after the market. They are doing their work, whether in some cases technology enabled, in some other cases just driven by technology, by intelligence. You know, there are several cases of alternative lenders reaching out directly to professionals on LinkedIn, you know, having profiled them and offering them, you know, enticing loan offers. And what you then begin to question is that how is it that the banks that are able to bring the scale into this play, not taking full advantage of this opportunity, but then as we see with the GSI policy in place, the BVN, it's all coming together, and it looks like the market is ripe, you know, for a leader to come into play. The time is right for the banks to also begin to explore partnerships. We believe that the traditional lending process requires a lot of manual reviews, a lot of credit check processes, but with all the technologies, the ability to leverage machine learning and AI, we believe that a lot of efficiency can be brought into this space. The GSI, BVN also helping to manage the risk of default. We believe that definitely this space is ripe for a leader, and we do hope to see more innovation in digital lending in the coming years. So I agree with you. It's a good time to attack this market.
Right. We want to just mention to our audience that you can please post your questions in the Q&A tab. So I'm going to take one of the questions. Landry, this question is around the prototype video that we showed for ACME. And Daniela is asking here that, isn't dependency going to be a big issue as we look at, retrieving, we talked about retrieving KYC from banks. I believe that she's also saying here that if you look at it today, don't we have challenges already from a connectivity perspective for the industry? And therefore, as we go forward and we begin to design around the user, how important is the issue of connectivity for the industry, and what can the stakeholders do about that? Landry.
Well, it's an interesting question. Where the connectivity issue really does exist, I don't think it's significant enough for that innovation not to take root. And I give you a typical example. Today, when people that interact with the bank are using the digital channels, be it the mobile banking application, internet banking application, and the rest, they are at almost every point in time. For most banks are able to guarantee about 95, 98, 99% availability. So the implication of that is for me to be able to use my internet banking application or mobile banking application and succeed in doing whatever transfer I want to do, it means my phone is able to connect to the core banking system of the bank. So which means connectivity really is not an issue. Yes, it comes into play every once in a while. But we think the bank's network and the infrastructure that supports it is robust enough that it can actually support this sort of model where the banks are able to expose their validated KYC. Another example is the NIP infrastructure, for instance, because there are various ways to attack this issue. You can attack it from the point of the banks being the one hosting this and providing this capability to each other, howbeit at a minute cost. We can also look at it from the point of view of having a centralized body then managing this. An example is the NIP, for instance. And today within the market, NIP availability is, at the minimum 95%, pushing on 99%, 97%, and the rest. So which means if we can support, the infrastructure already exists to support this sort of, this sort of innovation, especially around digital onboarding and KYC verification.
All right. Thank you.
Just to add to that, Boye,
okay.
I think as we talk about connectivity, we speak largely about infrastructure. Larry touched a bit on that, but I think the advent of 5G, I think, will really change the play in this space. Banks are also doing really well with regards to deploying monitoring solutions, and not just banks. So if you have a shared KYC platform, which will be some sort of centralization, we've seen centralization of a number of things in Nigeria, already. The needs infrastructure for interbank payment. It's some sort of critical infrastructure for payments in Nigeria. And as much as connectivity glitches can occur, monitoring becomes a real imperative, which we've seen not just the bank, but also needs to deploy some sort of monitoring solution to measure uptime and make sure corrective actions can be taken when those connectivity issues do take place.
All right, thanks, Tuji. Still around industry platforms, there's a question here around dispute resolution. And, one of the things someone's posted here is around the fact that the reason why we have a number of people in the branches is this issue of failed transactions, resolving disputes, and ensuring that, the customer, gets his resolution and he gets it on time. Ladi, what can we do differently about this issue?
All right. So dispute, I very much agree. Dispute resolution is one of the big pain points. But then we've also seen innovation within this industry that has helped to streamline the process of reporting a dispute up to tagging the specific transaction and making the experience for the customer somewhat seamless. In line with what Inye shared earlier, I think part of the things that banks need to do better around managing disputes One is around giving better visibility around the progress of resolving the dispute. Most times when it's an onus, that's a dispute occurring within the same bank, it's resolved faster. But where there's dependency on another bank, then of course you're depending on, a reconciliation, settlement and reconciliation statements from the processor, feedback from the other bank to confirm the whether or not the transaction indeed went through or not. And in such cases, giving that visibility to the customer also helps. Another approach that we've seen undertaken by banks in other jurisdictions is taking a sort of risk-based approach where you can actually, on the basis of the profile of the customer, apply some intelligence to, and saying, based on the value of this transaction, the profile of this customer, we do not envisage that this customer is lying. And in any case, provide an upfront resolution for the customer by even reversing or making the funds available. And if after the investigation process, we then realize that, there's a certain error, the customer can be debited. But of course, this would depend on some intelligence. This would depend on the banks, knowing their customers, knowing the customer's behavior, and being able to at least have a risk profile for the customer to mitigate this risk. So this is one of the ways that banks can still digitize what seems to be a major chunk of what customers are going to the branches for today.
All right, we're going to round off with two questions. Inyi, I want you to take the first question. We've had a series of questions around, look, the more digital, the more customers feel that they feel the exposure to, to cybersecurity attacks, exposure to fraud. What can the regulator, what can the industry do around, what can the industry do to ensure that from a customer perspective, we're giving more comfort to customers. We're bringing down, we're increasing confidence and reducing the incidence of, frauds, cybersecurity events. That's for Inyi. And then Lanre, I want you to round up with Stella's question. Stella has asked that we talked about user centricity, we've talked about omnichannel, we've talked about personalization. Can we shed more light on how these things are related to the whole platform discussion? Inyi, please.
Okay, so customers can actually be, made more confident in the process. And to start with, everything can actually be digitized and with all the associated risks mitigated to the barest minimum. So one way to do it is to ensure a very robust customer or user authentication process in place for processes that have been digitized. So we need to ensure that customers are able to use their OTPs or two-factor authentication in such a way that the risks associated with hackers or cybersecurity threats, are reduced to the barest minimum. I think this would help to ensure some trust in the process, and I think it's also a trust thing. It's going to take a while for banks to be able to come to terms with this, for customers to also be able to gain confidence in the process.
All right, thank you. I mean,
if I may add to that way.
Okay, Ladi, please.
Just speaking on the issue of trust and cyber fraud, which we've seen increase a lot in the recent times, I also believe that there's an opportunity to invest in more customer awareness and education. It's a known fact that the level of literacy, financial literacy, is still quite low, especially in the rural areas. I believe that there's still quite a bit to be done in terms of sharing experiences and getting the customers a bit more enlightened about how to protect their personal data, to sort of check the activities of fraudulent hackers and other types of threats to their personal details and financial assets.
All right. Thank you, Ladi. Lanre?
Yes, but to answer your question around personalization and this whole omni-channel paradigm, as well as, personalizing experience for the customer, one of the journeys, one of the thematic areas in which we think we found this, really lack of personalization, a thematic area that is ripe for personalization, and yet we're seeing across the industry, a general lack of that is the payments and transfer journey. What you find, for instance, is payments and transfer is that major journey that a lot of customers come to engage with the bank, on a daily basis, on a weekly basis, and yet it appears what the banks have done is to deploy the same journey for all customers. And I give you a typical example. I log on to, I was trying to do a subscription, for instance, of over 30,000. I log on to my first banking app, says I've exceeded my, transfer, my dues payment limit, log on to the second bank. And the first bank did not even tell me what that transfer limit was. I logged on to the second bank said you've exceeded your daily limit. I saw that I could update it, and then I tried to update it, but I couldn't really update. The limit was still there. And then I did the third bank, and I was then successful on the third bank. The question then is, why is bank C able to deliver the same functionality that the other two banks, is unable to? And this for customers just sort of gives a point of frustration. What I would have expected was for the bank to have known me enough that, based on, maybe the sort of transactions I'm doing, I shouldn't have a 10,000 or a 30,000 limit on the sort of bills payment I want to do. So we feel this journey is really ripe for personalization. And in terms of designing for the customers, I think the banks need to be a bit more attuned to what their customers are doing. They need to do a bit more analysis, try to know the customer more. This is what will then enable them to say, this is what the customer does. And another example is in the area of transfers, for instance, where I do a transfer at a particular day every month. I don't see a reason why each time I log into my bank app at that particular time, why my bank cannot suggest to me that is this a transaction you're trying to do. And these are all within that whole concept of user-centered design. Just the banks trying to know the customers and be able to deliver functionalities, and experiences that really excites the customer.
Well, let me extend that a bit. There's a common trend, obviously, that ties the whole concept of omni-channel personalization as well as user-centric designs. What we'll find, and I'll give examples. So you have a customer, for example, is in a space and a particular time, finds it more convenient to onboard via USSD. We know that there are certain constraints on certain channels. So like USSD, the bank are constrained in terms of what they can do. So you probably can't, harvest KYC document on that channel. So at best, that customer can only open a tier 1 account. But we also know this customer may need a tier 3 account, and therefore channels can work together. At that point, we expect the bank to be able to say to the customer who has just onboarded, hey guy, this is your account number, but if you need to upgrade this account, you will need to provide XYZ information, and you can provide it on mobile. You just quote this reference ID, which probably can just pull out, your KYC, enable you to sort of provide KYC information at that point. That's channels working together, for example. And I mean, it's all about making sure that you understand the context of the customer based on the data you have of him, and be able to then sort of provide those contextual solutions. I will give you another example around, what we find with experience not at par with what the customer is expecting. So you have a customer who has just onboarded on any of the channel. Again, I'll use onboarding as an example. And for this customer to be able to transact, he probably needs to onboard on a digital channel. Now, some banks are asking this customer to provide maybe certain digit of his debit card. I mean, when you look at that, it's counterintuitive, because this customer has just onboarded. He probably doesn't have a debit card, and you are asking him to provide, so you can see there that there's something not working for the customer. And these are issues that can be resolved when the bank can take, a user-centric design approach. Obviously, risk needs to be managed. Compliance is a big issue in bank, and bank needs to be compliant. But user-centric design means you think about the user first and fit every other pieces of the puzzle into the whole picture and make it work.
All right. Thank you. On that note, I want to say thank you, Ladi, Tunji, and Landry, for your perspective on the Digital Channel Scorecard 2020.